Time now for an in-depth look at the market news today, and for that, I'm joined on the line by Mr. Daniel Yu, global strategist at Yuanta Securities. Mr. Yu, thank you as always for making time today.
Thank you very much for having me today.
So, as expected, the Fed rate cut by 25 basis points overnight. How have the markets reacted, and what's your outlook on that front in the near term?
Yes, as you said, Fed cut another 0.25 percentage point, now down to 1.75%. So 3 times cut in the last 3 months or so. This was widely expected as end of last year that the economy is slowing down and the U.S.-China trade dispute continued. If we look at the rate cut, though, it is sort of the insurance type of rate cut, where the Fed might be cutting only 3 times, maybe 4 times, but anyway, not continually cutting because of the growth rate of GDP should stabilize around 2 percentage points. And this is kind of similar to what happened in the 1998 of third quarter when they cut the interest rate 3 times. And then if you look at the economic growth rate and the inflation numbers, it kind of remained quite steady. And then on year after, the inflation rose sharply, and then Fed raised interest rate very, very aggressively. At least we don't think, though, the economic growth rate will go down to the recessionary territories. And also we don't think that inflation is going to pick up anytime soon. So therefore, the current level of the growth rate and the low inflation environment, which we call it as Goldilocks period, should continue for next several years, maybe next couple of years at least. So if that's the case, then we think that equity market should continue to rise. Current environment looks very positive for the equity investment.
Right. Well, we'll continue to watch that, of course, and the Bank of Korea will be watching, too. It's cut rates also to a record low level recently. It's actually lower than the Fed right now. So how will this decision affect what the BOK does next?
Well, if you know, you look at the fiscal budget that's happening right now, the parliament is not passing the next year's budget yet. The opposition party and ruling party are fighting very aggressively in terms of the additional budget. So if the fiscal policy is not necessarily supportive of the economic growth rate to pick up in the future, then obviously you need to cut interest rate more aggressively. So BOK probably be faced with additional rate cut in the future. So U.S. cut 3 times, Korea cut twice. We think that Korea will follow that suit. Now, the supplementary, the next year's budget, which is 515 trillion won of the budget, and also the negative, the deficit number is about 1.8% of GDP, which is reasonable number, we think. So we need that to be passed quickly. If that's not the case, then lowering interest rate is more likely coming into before the end of the year. So we think that the overall economies will grow at 2% territories, but we don't see any major boosting to pick that up to 2.5%, 3% in the future. So if that's the case, we think that the Korean economic growth rate should be remaining below its intrinsic growth rate. If that's the case, the equity market performance should be okay, but relatively less than U.S.
Well, back here in Korea, the Samsung Electronics saw its profits in the third quarter fall from a year ago by 55%, but they were up from the quarter before a fair bit. We saw stocks up quite a bit today, but then closing quite a bit more subdued. What's going on at Samsung and in the local market? Sure.
As you said, the profits are down by 57% year on year, but on a Q-on-Q basis, it's up 17%. There are pros and cons of these numbers. We clearly see that the overall sales of the handphone was better than expected due to the Galaxy 10 and the foldable. But in terms of the chip and the LCD divisions, the numbers are still looking pretty bad. Particularly the DRAM business, it did better than expected, though, but nevertheless, the earnings were falling. Operating profits were down to 3 trillion from the previous of 3.4 trillion won. So clearly, the demand for the DRAM is not picking up as quickly as we like to see. But nevertheless, though, it is improving. And Samsung Electronics have said that the 5G will be probably picking up quite aggressively next year. China will commercialize the 5G next year, and Samsung will come out with the various lines of the 5G phones, and the actual price ticket will be probably lower for some of the new phones. So these things are definitely positive. If the 5G rollout is more aggressive next year, then Samsung's number will look good next year. As for the capex numbers, if they didn't think the demand is going to be weak, then they won't be investing that heavily. But it seems that they are investing quite the same amount as last year. They are expected to spend 29 trillion won of capex. The fourth quarter alone, 13 trillion won, which is the same as last year's number. So yes, the company is expecting the recovery that will come next year.
All right, Mr. Yu, that's where we'll have to leave it today. Thanks so much for sharing your insights. We appreciate it.
Thank you very much.